Let's get to today's market movers with easy to follow futures and options trades from CME Group.
Welcome to Market Movers. I'm Jim Urio, and it's earnings season again. Today we're looking at some marquee earnings releases and discussing some potential outcomes. We're going to be using weekly NASDAQ mini options, NQ, to adjust our exposure to these events. Joining me is Chief Investment Officer of Kingsview Asset Management, Scott Martin.
Hi, Jim.
Okay, the biggest single earnings event is?
Well, it's a lot of things. It's tech companies, okay? But specifically, it's Amazon, and this is why. Amazon has been driving so many trades throughout the S&P and NASDAQ that I believe the Amazon event, the earnings event that is going to be big.
I do too. And one of the reasons I think it is because last time Amazon really disappointed. It had $1.40 less than it was expected. It was the worst disappointment they've had in 15 years.
So I believe money like it's going out of style. Any money they make, they spend. Earnings, by the way, on Amazon, October 26th. The big date to keep in mind.
By the way, we should remind people that these earnings dates are subject to change, but right now we have Amazon on the 26th, Google the 26th,
and
Netflix
Microsoft on the 26th.
Oh, and Microsoft as well.
Big one.
Okay, now before we dive into our trade discussions, I'd like to point out that as with all market movers, it's important to view these trades as examples that allow you to see different ways to use futures and options products to either manage risk or create additional trade opportunities, not as recommendations or advice. Prices and movements will vary in the markets. Right now we're looking at the NASDAQ. It's trading about 60.70. Scott.
Jim, earnings season's about to get really exciting in the next few weeks. So if you have some downtime, I recommend tuning in to these earnings releases. Specifically today, I'm looking at buying the Week 4 NQ 6100, 6120 call spread for 9 ticks. It's going to cost you about $180 to put on with potential reward of $220. The reason I picked October 27th, as we mentioned, is because you have Google, Microsoft, and Amazon all encapsulated in that call spread expiration. You don't get the total NASDAQ earnings season, but you get enough in there to where I believe, given how close that call spread is to, my friend, to where we are today, that is a favorable risk reward to put on.
I do like it, and I'm going to, when you see my trade, you'll see I like it because it's actually quite similar. My trade is 20 ticks above it is the lower strike, the 2130, 2150 call spread for 7 ticks. Also expires that day, and again, I think the big day is the 26th like you do, and I know we don't get Apple, and I know we get Facebook, but we certainly get a lot on the 26th. NQ currently has an underlying of 60.70. This trade risks 140 to make a potential 260. Thoughts?
I like the expression.
Yeah.
And this is a great learning moment for if you're thinking about putting on call spreads or even put spreads for that matter. You can define your risk well, obviously, by where you want the call spreads, but also it's always good, as I do, to price those out at different levels, because sometimes, like you mentioned with mine, sometimes even though they're a little bit closer to you, the reward, the risk might be slightly different than what you expect it to be, just because of the way the market feels the market's
Yours is more likely to happen, mine's less likely, but cheaper. Last question, thoughts on earnings season? Last two have been good, as have revenues been good. Up or down on earnings season?
I think it's going to be up, and I wouldn't even say good. I think earnings season's going to be great this quarter.
I do as well. Thanks for joining us on Market Movers. I'm Jim Urio, where we're helping to make you a better trader.